All right, team. Specific quick video today. I'm going to talk about having more than one VA loan, which you definitely can at any one time. I've seen people who have had three before. There's ways to get it done. You just have to have $1 of entitlement remaining, and you can actually do a VA loan for the second, third, or fourth time. It's called second tier VA loan when you do the second one, and a third tier when you do the third one, which is rare. It's rare to do three. But two, you can definitely do. I'm going to show you how that works. I'm going to give you a link to the calculator where you can calculate this. We're going to look at VA mortgage rates today as well, while I have you. And we'll just kind of get you up to speed on how this stuff works. So where I'm at here in California, by the way, I can help you with all of your VA home loan needs in the state of California or Missouri. NMLS 155010. If you want to buy a refi, you can call or text me at the number on the screen right there. My email also works. And I'm a one-man production, so I'm going to get myself off the picture here. Going to get this off the picture here. Okay, so here's how it works. I'll give you a link to this entitlement calculator, and it's pretty good. Avoid clicking on these things over here. I want to buy a home. I want to refinance my home. This is Mortgage Research Center, which is Veterans United, one of the more expensive VA lenders out there, so just want to make sure you're aware of that. And essentially, the county that you're in matters. So you select the state first. In my case, California. County next, San Diego. And then it's going to give you a county limit over here. That's just going to automatically populate. For San Diego, it's 879, 750. And so I just use it as an example here to make some round math for us that we have $70,000 of entitlement that was used on the first VA loan that we did. So the first VA loan, I used $70,000 of entitlement. So now it's giving me, it's telling me, okay, here's my available entitlement, $149,938. All this stuff doesn't really matter. What you're really looking at is what's my max zero down price, and that's going to be $599,750. So given this county limit and my remaining entitlement, I'm not going to go through the equation. It's not that tough, but I'm just not going to go through it because it's boring. Because this is what this calculator is for. It tells you, hey, I can go up to zero money down. I can go up to $599,750 and not put any money down. This doesn't matter if it's a condo or a detached home. Either one doesn't matter. Okay. Now what you get to do is you get to go down here on the home price and say, okay, well, what if I want to go above 600,000? What if I want to buy for 800,000? Let's say. It tells you what your required down payment will be. And what you'll notice, I will to go through with the math with you on this one. It's 25% of the difference. Okay, so it's 25% of the difference between the purchase price and your max zero down price. 25% of the loan is what the VA insures. So if you go above what the VA is willing to insure, you just have to cover that 25%. So quick math, between 800,000, let's call it 600,000, is 200 grand. So 25% of that, or 1/4, would be about 50,000. And that's what it's showing here is your required down payment, about 50,000. So you can get that second tier loan, and it's not, and there is down payment required, but it's not too cumbersome. You still get all the benefits of having a VA loan. And it's totally okay if your first VA loan is no longer owner occupied. That's also totally fine. This usually works best when you buy your first property in a lower cost area. If you buy your first property in Florida or South Carolina or Missouri or something like that, and you've only used like 32,000 of your entitlement, look what happens. Now my max zero down is 751. So now if I want to buy that $800,000 house, I only have to put down $12,000 plus my closing costs. Or I can just go buy something that's 751, 750 or less and not have any down payment. So when you buy in one of those lower cost areas first, it tends to be a lot easier. Or if you go backwards and let's say you buy in San Diego first and you get stationed in Florida, and you can buy there for a cheaper home there, like a $150,000 home there with using very little entitlement, that will also be something that's very doable. But that's why it's important you put in the state, put in the county. These numbers will all change based on that. So use this calculator to help figure that out. And if you have more questions about a second tier VA loan, there are some intricacies there. There's some very specific scenarios that can happen with people. So reach out to me. That's what I'm here for. As a VA home loan specialist, I know how this stuff works. I've been through every situation you can think of. And I'll be able to advise you on this. And I respond to emails and texts all the time, not asking for your, credit, to pull your credit or anything like that. If you want information, give me a shout. That's what I'm here for. Okay, let's take a look. We'll do a quick look at mortgage bonds, and then we're going to pull up VA mortgage rates today. I'm going to give some specific scenarios on that. And obviously mortgage bonds here, just a quick education. they've been going down, as you can tell. And when bond prices go down, the rates associated with those bonds go up. So there's an inverse relationship there. So we want to see bond prices going higher. We've been seeing them go nothing but lower. The more you zoom out, the worse it looks. But we're still in this channel that I've been talking about for a few days where, hey, you know, this is kind of, and we've got some support there today too. It looks like the Fed stepped in and supported us because we were down big league today. We were down over 60 basis points at one point, and now we're only down 31. So that could be a lot worse. That candle shows there's support in this channel, and that's good because, as I've been saying, rates are not going to get better. Rates are going to get worse. The best case is that they stay the same where they are right now. That's the best case, is they stay the same. And then that, when I say stay the same, I mean they just trade within this channel. You know, you see we've been kind of just going in this channel and it keeps breaking down, but we keep coming back and we're staying in here. If we can trade in this range, I'm happy with that. Yeah, rates are higher than they were, you know, at the end of the year last year, but it's very doable with rates where they are right now. However, this could break to the downside big time. It's very possible. It could big time break to the downside, meaning that rates would shoot up. That's something that we're really watching out for. All right, let's take a look at VA rates today. So I'm going to do a couple things on this. I'm using 780 credit score. I'm using a detached or a single family home, not a condo. And we're going to do two different rate searches here. So as a broker, you're going to see when I plug this in that it's going to give lots of different bank options. And that's one of the things that's nice about being a broker. I'm not married to any one particular rate sheet, and I can help find the best deal for you. I highly suggest you do the same thing when you get insurance. Go to an insurance broker. They can do the exact same thing I'm going to do here with insurance. Search all the major wholesale providers and get you the best deal. So that's what we do, and that's how this part works. I'm not going to put there's an exemption for the funding fee here because it doesn't matter for the rate. The only thing that matters is the loan amount and the credit score. Whether it's a purchase or not doesn't matter. It would only matter if it's a cash out when you get to certain loan to value. So we're just going to keep it very, very simple here. We're going to do a conforming balance. So this in San Diego is under, well, actually anywhere is under 647,200. So I'm just doing 600,000 just to kind of see where that lands. Okay, Flagstar and Penny Mac at the top, Caliber, Freedom. Try to avoid Freedom in most cases. Just had lots of complications with them. So 3%, here's the rate sheet. So you can see you get 3%. That rate with no lender fees, okay, we charge zero lender fees. It says $85 on here, but that's something that is handled outside of closing. We cover it. Anyway, you don't pay that. You pay no lender fees, no points. You get 3%, and you would get $2,332 towards your closing costs in the form of a lender credit. So that's today for conforming balance. So under 647,200, that's what you're looking at. That's the best rate today. And it's interesting to watch how these things change from one bank to the next, from day to day. And that's why it just makes no sense to be married to a rate sheet and work for a bank. You know, some days you'll be okay. Some days you won't. You know, clients want your help all the time. So you need to be able to find them the best deal. And this is the best way to do it. So now we're going to go above that 647,200 number. And I'm just going to do 700,000. Just to make it simple. Primary residence, 780 credit, single family, no fees, no lender fees built into this. So when you go above here, now it flips over. Now Penny Mac is better. 3.06%. That's weird. It's funny how they do that sometimes. And it's now you can see why, because there's a big gap between 3 and 3 1/8. And so they built in a rate that's a tweener so that you aren't trying to sell 3 1/8. You can sell 3.06. And that's pretty cool. So no fees, no points, and you get 3.06%, and you get $537 as lender credit today for high balance. So this is actually not bad. This is not bad. This is actually improved a little bit from earlier this morning, where it was 3 1/8. So we got a little bit of improvement, but you can see where that happened here on the charts. You know, we were down here at one point today. If I zoom in on today a little bit, you know, it was not looking good. I mean, when this was a full red candle down here and we were down 60 some basis points, it did not look good. I thought the bottom was just going to fall right through and this candle was going to hang itself, but it didn't happen. We got a bounce. I think the Fed stepped in, pushed the buy button, pushed this thing back up. They're trying to keep it in this channel. And if that's what they're doing, then great, because that's what we need. So, so this was actually worse earlier today. which is good to know. Good to know. I actually quoted this earlier at 3 1/8, so I need to let my boy know. 3.06. So still really good. We're talking right around 3%, for VA loans. You know what? While we're here, let's do a cash out for giggles. I did get a VA cash out scenario question this morning. So let's pull it up. Let's see what it looks like. She said the home was worth $950. She just didn't know her credit score. There wasn't really going to be any cash out. See, a VA cash out, it doesn't necessarily mean you're getting cash. It just means you're not doing an IRRRL and you're not doing a purchase. There's only 3 different, categories for a VA loan. It's a purchase loan, it's an IRRRL, which is a VA to VA refi with no cash out, or it's a cash out, which is a VA or which is a refi of any other kind. And in this case, she just needs to get her husband off of it because they got divorced. So I don't know what her credit score was, but I know that's the property value. Let's say this is what we owe. So we're going to do conforming balance, VA cash out. Let's see what it looks like. Is it the same? Is it right around 3%? It might be. Yep. Right at 3%. And then let's see if we go above that and just see if that stays also right there or if it does jump up at all. And really what you typically find is that this is the case. Yeah, the exact same. The rates will only get different if we go above 90%. So let's do that real quick. Let's say it's worth $1 million, and let's say we want to borrow more than 90% in our cash out here. We want to do $950,000. So that's going to bump up our LTV above 90%. Now watch what happens to the rate. No matching products. Interesting. What, did I screw something up here? I'm trying to think, did I screw something up? Should be able to do 100%. Okay, maybe that's it. Oh, no, I know what it is. My bad. Click something on accident here. So you see, you go above 90%. Now that cash out is 3.375. So a little bit higher. Still really good. Still really, really good. In fact, let's go back to the purchase side. I want to make sure I didn't screw this up. And these rates are obviously only good for this moment in time. They could easily change. They do, in fact, change on a regular basis. Okay. So actually, yeah, I had a button clicked earlier that's sort of screwed it up a little bit. So you actually 2.99 is on the table for the conforming balance. And that's nice. That's with a $1,500 lender credit. So a little bit better. It wasn't exactly 3%, 2.99. Almost the same. Let's see if we get the same kind of thing on the high balance here. Just because we like to be accurate. Anyone who works with Loan Sifter and Optimal Blue knows that's just the most annoying screen in the world. For no reason, at given times, it will just say, sorry, something went wrong. We have decided we don't like your query. So, here's our middle finger. Enjoy. Goodness gracious. Well, that's the one thing that sucks about doing a lot of stuff live right there. It's just not working for this minute. I may need to log out, log back in, whatever. Okay, so be it. That's the deal. Just wanted to give you a look at rates. If you have a question, looking to buy a refi, give me a call or text, shoot me an email. I'm happy to help. I can look at if you've gotten a quote from a lender, let me take a look at that for you. They are very good about hiding things. You know how many people have called me and said, oh yeah, I've got this rate. And I'm like, are you paying any fees? And they're like, no. And then I'm like, okay, we'll send it over. Let me see. That sounds good. I get it. Tons of fees. So unfortunately, a lot of people are getting ripped off out there still. And I don't want to let that happen to anyone. If you have a loan quote, let me see it. I'll tell you. If it's great, I'll let you know. You can give me a call, text, shoot me an email, and I'll talk to you guys soon. Thanks for your time.